Can the growth segment of the market push through key resistance levels? Are Australian property trusts being mopped up before they break out and rally? Gary Glover is guiding us through the charts, sharing his insights and talking about his new trading shares for this week. Good morning, Gary. How are you?
I'm excellent. Yeah, property trusts. Who would have thought? That was not on my agenda to have a look at those. And the bizarre thing about that was sort of following the home builders, obviously 2 or 3 weeks ago, sort of similar setup. And then literally, I think it was Sunday night, I was reading that that I think some of the most heavily shorted positions at the moment are the REITs.
Wow.
So I thought, wow, that's interesting.
It's rare to have property trusts on a trading conversation, podcast or video, because quite often when I filter them, if I come up with trades, I'll sometimes filter out property trusts because I know they're less likely to have an explosive movement. But you've actually looked at some in the portfolio this week.
No, some look pretty interesting, and it's just bizarre sort of how that people talk about these being some pretty heavily shorts, people pretty bearish that sector, which is just like that is the ideal scenario where everyone's thinking that commercial property is gonna fall through the bottom is going to fall out of the market, and if everyone's short there, if everyone's already positioned on the short side, so there's no one else left to go short. And so it's interesting. It's funny. I was listening to on Aussie a commercial property guy, and he was talking about the vacancy rate commercial property. It's just saying that can't get commercial property. So I was talking about how unloved it is, but there's actually there's zero availability for commercial property. It's like you can't find something. It's that industrial space there is just sold out. You cannot get an industrial property. That was quite interesting actually listening to, because the noise is pretty negative, but the reality is quite something different. So maybe quite curious.
Well, we'll have a look at those charts in a second. To start off with, in this week's report, you've got the NASDAQ here. It's often a chart that you start with, but we're having a look at this. Quite excited to see you've put a cup and handle formation, which is pretty cool. So can you talk us through what that is and why it's on today's chart?
Yeah, so we have talked about the cup and handle a little bit here the last few months. And typically the cup and handle formation is something you see in the strongest sort of stocks. I either see it in sort of growth stocks or high momentum stocks there. And you have a bit of a correction, kind of sort of, a bit of a pullback there with it, can be a little bit V-shaped, or oftentimes it's a bit more like a rounding sort of pattern there. And then you sort of pull back in a shallower sort of pattern. So obviously something like a ascending triangle or a pennant will have a bit of a breather and the price will sort of tighten up. But the cup and handle, you have that sort of, the breather, and then the price really tightens up, underneath a bit of a resistance point. And as you and I know, Chris, here that the best sort of handles are when they're narrow. So if they only sort of come back, 50% of the cup or better, then they're the sort of stronger looking charts here. So that's a pretty small handle, definitely sitting under 50% of that range. So that's a good sign there. So that's just a pattern which typically shows up in the strongest sort of stocks here. So NASDAQ obviously is an index, so a bit more broad based. But it is, look, every formation can fail, but it's just interesting here that we're getting this sort of setup here. And we're talking about growth. Obviously growth has been crunched, so it was going to take a little while to build, and then typically it takes out of that 0203 sort of period there, took a few months to sort of build up, and then got some momentum, then it sort of got going here. So this has sort of followed the same sort of pattern here, really did a bit of a base. You've got a few high lows sort of setting up here, setting up under a bit of a resistance level. Price now sort of tightening up here, and as I've mentioned before, haven't seen too many distribution days. We saw, I think end of March there we did see a couple a follow through day, so big sort of day up, big volume as well. So just seeing sort of constructive signs there. So these things sometimes they need to build. No one's sort of talking about we're not seeing the breadth of the market. So that's a little bit of a concern there. But oftentimes they can start that way. So it's just sort of not uncommon to start that way. Usually the big ones move and then it sort of filters through the mid caps and then the small ones. So feels like some of the big caps have already moved. We start to see some of the mid caps sort of follow here. Then we'll get that breadth kick through here, but definitely around that. I think it's 12,230 big level on the NASDAQ. It goes through there. That'll be pretty bullish. Technical sort of close there. So that will well and truly have the bears in all sorts of disarray there. But we'll see what happens here over the next week here. But the interesting pattern to watch here.
Indeed. And if we have a look at the S&P 500, the next chart that you've got there on the report this week, you've said that it's a classic basing pattern characteristic. So what is a classic basing characteristic and where is it on this chart?
Yes, the main thing here is we've had that deep October low, and that's our typical mid-term year low, right in the favoured month. Typically get a higher low in March, and then sort of off we go. So the fact that we've sort of broken out of that range, come back for a retest, which is classic textbook sort of stuff. I think we mentioned Stan Weinstein's sort of book in the last couple of weeks in the setup there. But yeah, so we just really need to sort of kick on here with a bit more volume here. So that's probably the only thing missing here is sort of strong volume, but not seeing any distribution, not seeing any sort of strong selling on the down days.
And you've mentioned those distribution days over the last couple of weeks. So what else are you seeing on the S&P 500?
I think it just looks, pretty constructive here. Obviously, we've had that October typical mid-term year low, which we're looking for, and then usually a March will be the high low. Is the normal sort of cycle sort of setup, and that just happens to coincide with us breaking out of this range, and then coming back and retesting that range, which is sort of textbook. So that's if we showed sort of Stan Weinstein sort of ideal investor buy. That's basically it. So we're looking for a breakout, come back to retest the zone, and then go from there. So we just really need to see a bit more volume come through here, start to sort of get a new high there. So the good news is that we have, probably not to see a bit more volume come in. So we haven't sort of seen the breadth here quite yet, but we are not seeing signs of distribution, Chris, at all. So not seeing any aggressive selling. So it's just sort of more sort of slow and steady sort of building phase here. So which was exactly what the 0203 set up exactly the same way. So there is some precedent there. So I still view it as being sort of quite constructive. There's still plenty of bears out there, which is ideal. I think we do worry. We want the market to be climbing the wall of worry. It still has to be everyone. If everyone gets too bullish here, then we'll probably be wrong. So we're certainly not at that point yet.
Well, you're talking about climbing the wall of worry. We were definitely worried on the Australian market because you've noted that we had those 7 consecutive weeks of going down, and then we've also turned and recovered quite sharply, haven't we? So how do you interpret that?
Yeah, so we have. So we've bounced quite strongly. The volume, I think, has been pretty robust, actually, volume. So we've definitely tapered off here. The last 3 or 4 weeks, the volume has tapered off, but that's quite natural. So you just be a little cautious there with the volume tapering off. But I think after having that sort of 7 weeks there, and considering how strong this bounce has been so far, that's not like a dull or corrective type of rally here. It's actually quite constructive rally. So yeah, I think it's what we might see is we might just see the ranges start to reduce. So instead of having these big wide range days, we might just sort of see a few small range weeks up here. But I think it looks still pretty positive to me. Nothing sort of too negative in there so far. We might even have a few small weeks and we might trail that that overhead sort of trend line there, that green line there. We might just track that up there.
Okay, well, you've talked about growth shares possibly being at a critical point and breaking out. You did talk about the NASDAQ. Some growth shares on the ASX can be included in this technology index. So it's great that you've put an indices in here. You've got ascending triangle. So we've got these nice red lines that you've drawn on here showing us the overhead resistance and the higher lows that are happening. What tends to happen if we look back in history and you learn from patterns, and what's the probabilities? What are you seeing here, Gary?
Well, it's just interesting that both of those indices are up near sort of key resistance zones. So they're at the same time here. So although the Aussie market isn't sort of renowned for having a ton of growth stocks there, or a ton of technology stocks there, we've seen that, we're definitely starting to see a bit of performance there for some of our growth and some of our tech stocks. But yeah, we're still sort of building there. So the ascending triangle there is, does tend to sort of favour the upward break more than the downward break. It is sort of slightly more bullish pattern. It can still break down, but yeah, greater probability sort of breaking up here. But yeah, I just think it's really interesting that both those indices are sort of setting up quite similar, and we're seeing a reasonably constructive sort of move in some of our stocks there. I mean, things like car sales and SEEK and just been quite a few of the growth stocks that we were looking at here have actually, Zero has had some pretty decent moves. So, just pretty constructive there. So I think if we close outside above that, I think it's 2,300 there, weekly close above that, we'd be pretty constructive as well. So, so this could be kind of a big week here on the market there if we do close above that zone there. So, quite pivotal this week for growth stocks.
Nice. Well, if we move over into having a look at some of the trading shares, one that you've picked up is Credit Corp. You did mention them last week. What I'm interested to see is that you've got this red horizontal line here, the support, and the chart's been down below it. But is that what we're looking at here? Is that kind of the opportunity that you're unpacking?
Yeah, it's two things in. So we've gone to a new low, a bit of a false break here. I like that last rally actually did take out the previous swing high all the way down. So we're bounced back up to $25 there. So they can broaden out sometimes. It's rare to go and actually broaden out to a new low, but does happen. You probably see this set up more often at highs. So you might do that's like a broadening sort of pattern there. You've actually gone, above that from that last. It's like in normal downtrends, you don't normally sort of break the swing low until the trend changes there. But sometimes you can get a marginal break like this and then come back and do a marginal new low there. That's, if I saw that in reverse on the sell side there, that would be a really strong sell for me. So the fact that we've sort of done that marginal new low, it's been pretty heavy volume, the sort of 3 weeks, week of the low and the 2 weeks prior to that. So definitely looks like some accumulation taking place as well. So yeah, good little setup there. We're a very well managed company in the past. I know everyone's sort of worried about debt books here. I just think maybe, we're starting to just see a bit more defaults here, Chris, as well. So seeing a few building companies sort of go under, just a little bit more pressure. I mean, really, with all that free money in the economy in the last few years, there's basically been almost zero bankruptcies, or very, very few. So being sort of hiding, masking, all of that sort of stuff here. So these increase in bad debts is that's not great there, but it's more normal to have some of those. Some people unfortunately succeed and some don't. It's quite a natural process, but I think a lot of free money there has sort of been hiding elements of that in the economy. So I think you'll sort of see that, and that's probably worked against Credit Corp as well. So I was thinking there's not too much bad debt. So there's a bad debt start to grow there, and those books will start to grow. People will tend to look forward. It might be a little while before Credit Corp gets the upswing there, but again, the market does tend to look forward here. So I think this is pretty interesting, this one. So so I've already sort of started to add some in here, and I think it's pretty. I like it.
Another one that you've brought in is Life 360. Now, this is a massive massive downward movement, $14 coming back down here, what, $2.50, $2.75. Huge pullback, and then sort of went for a rally, but it seems like it's sitting on this support and tightening up. That's the sort of descending triangle, isn't it? So, or
got a descending triangle. So oftentimes they can break out to the downside. They'll obviously maybe slightly bigger weighting there, but yeah, we're basically looking for congestion pattern and breakout upside. So we did pop our head out the range there last week. Just haven't sort of gone on with it there. Do like the fact that the really tightened up the pre weeks before that. Very, very well volume on that sort of down week. So it's also a big level too. That level there that's been sort of bouncing off. It's had so many touches there sort of historically as well. So and yeah, the other thing about this, Chris, is because we sort of did trade this sort of late last year. This stock here, because I remember the market found a low in October. What was 360 doing? So making a high low. So it's really showing really showing outperformance. So this is sort of this is what the textbook sort of tells us here, that when the market's at near lows, you've got to be looking for the stocks that are making sort of high lows. And that's exactly what 360 was doing there. You see how big a move we had there. So going from probably mid fours up to mid sevens, so it's a pretty decent rally. Then I've come back here again. But this is the type of stock that we need to be looking for, because this has showed outperformance so far in this market. So watching this one pretty closely here. I like the way it just seems to be sort of holding tight here. Just might need a little bit of a push out of the range, but this is one that I've got a bit of a starting posse here. Got a pretty tight stop on it, but yeah, it's one that I'm pretty keen to add to if it can just show its hand a bit more. Just needs to sort of kick up out of that range, do something a bit more impulsive. Just give us some confidence it's just going to go on with it. But yeah, the very interesting pattern here at the moment. Well, nice and tight there, but yeah,
nice and tight congestion above that support line. Another one that's formed a triangle, a different type of triangle. Sort of you're coming into this congestion, it looks like that volatility is diminishing. So the breakout from this sort of 26 region that was tested and then rallied, but then it's tightening up, coiling. So how do you view this triangle for ARB Corp?
Yeah, so a couple of things there with sort of, the whole thing has sort of been tightening up here. So a little bit of an isosceles triangle there. So it's sort of getting tighter and tighter. However, so you do have that VCP pattern there as well, Chris. Basically, sort of each pullback's getting shorter and shorter and narrower and narrower there. And we just actually started to break out here. I think we might have break out here yesterday, just above the previous little swing high, so a little bit constructive there. Volumes are pretty light here, but that often does occur when you sort of coil up like this. But yeah, I do like to look at this. I think the fact that we've had a pretty impulsive rally out of the low and then sort of gone sideways is constructive as well. So that's what I like to sort of see. What's the last thing on the chart? It's sort of this impulsive move up and then a corrective move sort of sideways. That's, typically that type of move will break in favour of how it's moved into that sideways pattern. That in this case, that's an upward move here. So yeah, watching this pretty close to there, but I've added a small little parcel here again. But yeah, I think this looks pretty constructive there.
Another one in your trading shares is one that we're a little surprised to see, because you've been saying for some time that mining and minerals have not been, commodities not really the place to be. This one hasn't been rallying to the same extent as the majority of companies you've talked about when having that conversation. But there's an A, B, C, and then there's also these 0-100s, which are the Fibonacci levels. So where's the ABC and what's the Fibonacci? Where do they cross over to get your attention?
Yeah, people are still sort of asking about my view on commodities and resource stocks and stuff there. And look, if that inflation totally disappears, which I think is a low probability, I think it'll linger a bit longer than perhaps, then that usually means the place that commodities will be okay. They'll just be quite volatile here. If inflation does, if the Fed does get on top of inflation and stamps it right out and keeps a foot on it here, then I think there's some risk that commodities can come right off. So that's a risky segment. So you'd only sort of want to sort of see that segment have a fairly healthy, fairly large correction, sort of come back large in the range, and then also think that each sort of resource, each sort of sector there, will have its time in the sun. So gold will be hot, and then it's like you've just got to be following the hot sector. You want to be sort of following the sector which is sort of on the nose a little bit. So I know a lot of those lithium stocks have come back here. That Liontown bid has sort of put them back on the map a little bit in the last week so just sort of puts them back in focus there. But we've had a pretty large correction there. That's a large ABC correction, come back 61.8% of the range there, so a bit of a technical zone. And then we've tried to rally there, some okay volume on that rally, and pull back on some sort of lighter volume, so that's kind of constructive. We're just starting to see some volume coming in for potentially a first high-low setup here. So some decent signs there, just really good, healthy, or fairly large correction. Good correction in time there, good sort of, the whole sort of, that ABC, there's sort of some geometry as well in it. Sometimes if you think about Elliott wave, you sort of learn there is, you learn all these sort of, 5 waves up and 3 waves down. But if you actually learn that the time settings, these corrections can take a lot of time to actually occur. Most people tend to sort of jump, seeing that little 3-wave pullback and think it's all over and done with. But reality is the corrective phase can take as long as the rally, if not longer. Sometimes it can take about 1.5 to 2 times the length of time. So just needs plenty of time to use up in the correction. I think, this has had a fairly decent sort of pullback there, close to 18 months in duration there. So it's a fairly healthy sort of correction in time. So it could potentially be building here. This is obviously just one that, if Liontown's potentially a target there, then maybe Pilbara as well. So, but some risk in the sector, but definitely one to sort of, just definitely a big critical level there technically. Just has all the hallmarks there. Just need to sort of see some setup here. So it's one that I'll be watching pretty closely there, just because it, potentially has sort of completed its correction there. But, I want to see a bit more evidence there first, me personally.
Okay, well, we move over to the real estate investment trust. So you've got one, Growth Point Properties, GOZ is the ticker. Something looking familiar here. We're coming down to a support line, which is right near a previous low. Touched it once, rallied, come back again, rally again, and then touch it a third time. And each time it comes down here, we're seeing high volume down here, getting down to higher volumes, not quite at the low. And then you've highlighted here this volume down here, which is at the low, but also the next couple of weeks afterwards. So what are we looking for here?
Yes, I mean, basically we've sort of come back from $4.50 under $3 there, so lost, a third of its value here. And that's just the last year. That's not sort of what's been happening sort of prior to that. So pricing in a lot of doom and gloom here. So the property sector there, pricing in like we're going to, a third of the tenants here are going to move out and everyone's going to stay at home and no one's going to want office space there, which is what everyone thinks. Commercial reality might be quite different from that, but technically there we just had had 3 tests of this low here now, so that's a big level itself. I do love this little this overlapping sort of nature there, this little 3 thrust low there. In fact, it was sort of gone to a marginally low each time. It's pretty low. This one here, you can see here the volume has really picked up here the last 3 or 4 weeks. So we're starting to see sort of signs of accumulation occurring here after what I think is a fairly deep correction there. Everyone's super bearish this segment as well. A lot of reported shorts out across this segment as well. So that's got all the sort of hallmarks there for a counter move here in a rally there. So this looks pretty interesting to me. Sort of similar to sort of the homemakers there, sort of stocks like James Hardie and Lendlease and that, probably 2 or 3 weeks ago. We've seen, if you want to go and look at those charts the last sort of 3 or 4 weeks, they've really had a bit of a pop here. So, I'll just be keeping an eye on these here. This looks pretty decent. Now, I think Growth Point's got a bit of a mix of office and industrial. So, obviously, industrial, everyone's thinking about that a lot more positively. Office a little more negatively, but yeah, I'd say that if you ask anyone in the commercial property what's actually going on, and it's a little different than all the noises that we're hearing. I can tell you that.
Well, another one in that property space is Centuria Office REIT. COF is the ticker. Little surprise to what they focus on. Falling in the same boat. Look at that drop in a COVID, belted, hit hard, did rally with the markets, but as you're saying, the noise in the markets just didn't really get them back up. It's sort of bad news. Didn't quite get back up to their highs.
Yeah, for pure play office REITs, this is sort of, this is probably the sector that everyone's been saying to avoid at all costs here. But we've now sort of come back from 260 back to 140 here. So so we've almost sort of cut in half. They sort of pricing in a lot of doom and gloom there. But just starting to see that the volume started to come in there. Chris, just sort of signs of accumulation there. It's a big level because it's retested the recent low. And this is an old low here back in 2020 as well. So you've got a few touches down here. So it's a big technical zone around that sort of 140 there. So I just like the fact that we're, everyone's short this sector. Everyone thinks it's no one's going to go back and work in the city. It's a big level there. So I think you're sort of, sometimes you can price in all the doom and gloom, and then some. So the reality may not be as bad as everyone's priced in here. If everyone's already positioned on that short side, who's left to short this? I mean, if you're not already short here, you want to be coming in after this. It's already sort of dropped half as well. So that's that's the sort of psychology of this sort of position here at the moment. So at some point, you got to cash in your chips for being short. That means you got to buy back your short position. So I just think this looks pretty interesting to me. So definitely seeing some that increase in volume there is really catching the eye.
Now, the last group, and what we alluded to at the start, was the growth shares. You talked about it with the NASDAQ. You talked about it with the Australian Technology Index being partially growth as well. Here are two that you've added to your radar. Strong management teams, good quality companies, but they have had a pullback. DDR fits in that category, but what is it about the chart that's caught your eye and you've said you'll keep on your radar?
Yeah, so I think there's just in the past there, they've been sort of pretty well managed companies. So and they've sort of started to come down to some pretty decent multiples for what are pretty high growth businesses in the past. So Domino's has had a few issues here. Obviously they've sort of had a few slight downgrades, had their issues in Italy there, but still growing. So still a pretty good business there. Definitely got some recession type elements there. If we do have a recession, everyone's been talking about us having one. The data still hasn't sort of shown that to be the case yet. But I just noticed there's a definitely exhaustive looking sort of lows there. We're sort of starting to build here. So that's one to sort of keep an eye on. And that Dicker data as well, that was sort of a bit of a star in the last bull market. I know we often sort of say the leaders of one bull market won't lead the next. And that's definitely been the case here so far. It's been a real lag up here, but there's still pretty well managed business there. I think we've sort of come back to a reasonable multiple here now, quite a low here, but just the price action's really tightened up here. So the last probably 4 or 5 weeks sort of seen price action really tighten up. Volume sort of tighten up here. So, a lot of those growth stocks are just starting to move up and out of the range there. So it's just one that I think I'm just going to keep a close eye on here, just for those reasons there. So just sort of bring that people's attention there, just to, I think we've got to, with those growth stocks, I think if they break out, if the NASDAQ breaks out of that range, and then if the XTX, the Aussie Technology Index sort of breaks above its range as well, they're both sort of quite bullish sort of signals there. So probably want to be adding a few more tech stocks there to our portfolio, even though we are pretty heavily invested at the moment, but just the stocks I'll be looking at.
Nice. Well, that's a good summary of the market as it stands at the moment, what to look for on the indices, as well as the trading shares this week. So to that end, we say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.
So we have been talking about lots of different trading shares and lists that you generate, lists that you filter through to find these trades. That's something we've been talking about off air. So it would be interesting if anyone is interested in that, leave some comments below if they've got some interest in following and keeping across sort of lists of shares that are catching the eye. And we'll also put on the right-hand side Gary's Friday audios, the links there where he goes through charts in detail of some of these lists, and then also some of the trading strategies like springs, false breaks, volatility contraction patterns, more detail. And on the left, Gary's Twitter handle if you want to follow him there.